Giving a gift feels great. It's one of the most generous things you can do. But what if I told you that when it comes to annuities, that one act of kindness could accidentally trigger a huge, and I mean huge, tax bill for you? So how do you make sure your gift doesn't become a really expensive mistake? Well, let's get into it. We've got a super simple roadmap for you today. First, we're going to unpack the tax trap itself. Then I'll show you the #1 method you have to avoid. After that, we'll get into the good stuff, the smart ways to gift, some other tools you can use, and we'll wrap it all up with a handy checklist. All right, let's start at the beginning with the core problem. What makes gifting an annuity so tricky and so different from just, writing a check? And this really is the perfect way to think about it. You think you're handing over a nice gift, all wrapped up. But what you're actually doing in the eyes of the IRS is cashing out all the tax-deferred growth in that annuity, all at once. So you give the gift away, but the tax bill for all those years of gains, that lands right back in your lap, due immediately. So just so we're all on the same page, what we're talking about here is transferring ownership of a non-qualified annuity. That's just a fancy way of saying an annuity you bought with money you've already paid taxes on. When you give that to someone else while you're alive, it triggers a very unique set of tax rules that you just don't see with other assets. And this is why we're talking about it today. It is a financial landmine that is just so easy to step on by accident. But the good news, it's 100% avoidable if you just know the right way to go about it. So here are the 3 big rules you got to know. First, and this is the absolute kicker, all the gain, every penny of growth, is taxed to you, the giver, as ordinary income in the year you make the gift. Second, as if that wasn't enough, if you're under age 59 and a half, you could also get slapped with a 10% penalty on top of the tax. And finally, and this is a big deal for estate planning, annuities do not get a step up in basis. With things like stocks or your house, when your kids inherit them, the built-in capital gains are often wiped clean. With an annuity, that tax bill is never forgiven. So what's the single biggest mistake people make? It's probably the first thing that comes to mind. And it's almost always the absolute worst way to do it. It's a simple ownership change. You just call up the insurance company, sign a form to make your child the new owner. The only pro? The paperwork's pretty easy. But the cons? Well, they're everything we just talked about. You get hit with that immediate tax bill, maybe a penalty. It's a total mess. So who should stay away from this method? Honestly, pretty much everyone. If you care at all about being tax efficient and making sure your gift has the biggest impact, just changing the ownership is the absolute #1 mistake you can make. Okay, enough about the problem. Let's pivot and talk about the solutions, because there are much smarter ways to pass the value in your annuity to the people you love. The simplest, cleanest, and most common strategy is this. Don't give the annuity away at all during your lifetime. Instead, you just name the person as your beneficiary. The beauty of this is its simplicity. It costs you nothing, you don't trigger any taxes for yourself right now, the paperwork is dead simple, and it avoids probate, which is that long, expensive court process. Now, the one catch is that your beneficiary will eventually have to pay income tax on the gains when they take the money out, but at least you're not creating a tax bomb for yourself today. But what if you're thinking, I really want to give a gift now? Well, there's a smart way to do that too. Instead of giving them your old annuity with its built-in tax problem, you gift them cash to buy a brand new annuity in their own name. This works so much better. You're gifting cash, which is clean. They own the new annuity from day one, so it's their asset with their own tax basis. The only thing to remember is that the cash you give them does count against your annual gift tax exclusion. That's just the amount the IRS lets you give someone each year before you have to file a form. All right, let's talk about a more advanced strategy. Maybe you need the income from your annuity now, but you also want to leave whatever's left to your kids. This is where a cool feature called a lifetime income rider, or a GLWB, comes into play. This is kind of the have your cake and eat it too option. The rider gives you a guaranteed paycheck for as long as you live. You keep total control of the money, and when you pass away, whatever's left goes straight to your heirs, no probate. The trade-off? These riders have fees, which will eat into the account value a little bit over time. We've been focusing a lot on annuities, but sometimes an annuity isn't even the right tool for the job. It's so important to think about your goal first, then figure out the best way to get there. Just look at some of these alternatives. If your main goal is to leave a clean, tax-free inheritance, life insurance is often way better because that death benefit isn't taxed as income. If you need control over when and how your heirs get the money, you need a trust. And for things like college savings, a 529 plan is designed for that and avoids all these annuity tax issues.
Okay, let's bring it all home. We've talked about the problem, the smart solutions, and some alternatives. Now, here's a simple checklist to walk you through the actual process. Step 1, figure out what you're really trying to do. Is this about you or about them? Step 2, look at your annuity statement. How much taxable gain are you actually sitting on? Step 3, choose the right strategy based on what we've talked about. Step 4, and this is non-negotiable, talk to a tax pro. And finally, step 5, work with an independent broker who can show you all your options, not just one company's. So I'll leave you with this to think about. Is your legacy protected from these kinds of avoidable taxes? A little bit of planning today can make a world of difference for your family down the road. And if you're looking at your own situation and feel a little stuck, the Annuity Expert is a fantastic resource. They can help you compare different products and strategies to figure out what makes sense for you. Best part is their services are completely free. You can call them at 770-755-1565 or check out their website, annuityexpertadvice.com. Hey, thanks so much for tuning in. Getting this one decision right can have such a huge positive impact on your family's future. So plan smart and protect that legacy.